the chairman of this auspicious event, the incoming president of ICAN, Afikpo District, Mr. Josephat Okonkwo, dignitaries here present, the press, ladies and gentlemen. I am Professor Mogo Ajukobas, a professor of environmental and biochemical toxicology, and currently the Honorable Commissioner and member of Ebonyi State Executive Council, in charge of Ebonyi State Ministry of Market Development and Parks. I feel profoundly honored to stand before you to give this guest lecture, which I decided to title Promoting Nation Building Through Ethical Professional Accounting Practices. Today, on the occasion of induction and investiture of the President ICAN Afikpo District. By way of introduction, accounting can, in simple terms, be defined as a system of recording and summarizing business and financial transactions, and analyzing, verifying, and reporting the results. The accounting processes include, but not limited to, summarizing, analyzing, and reporting these transactions to oversight agencies, regulators, and tax collection entities in both private and public sector. Accounting is considered a profession because it is a field that requires specialized knowledge. People outside of the profession must be able to trust that the accountant is competent and ethical. This is because they rely on the accountants who prepare the financial statements, as well as the auditors who verify them to make decisions. Professional accountants are vital to our economy and society. Accountants ensure the effective use of resources by recommending ways to reduce costs, increase revenue, and mitigate risk. The accountancy profession is only as good as the quality of services provided by its members. The regulatory environment of the accounting industry seeks to ensure the quality and consistency of these services. This means accountants must comply with ethical, technical, and professional standards. Accountants must represent the interests of their client or company and the indirect users of accounting services, such as investors and creditors. Therefore, cultivating trust within the industry is extremely important to business, the economy, and the larger society. And so, by what we have just tried to put forth about accounting and the accountancy as a profession, what is accounting ethics? Because we are talking about a situation where the users, the consumers of the services of accountants could be trusted, because the consumers rely on their input to make valid decision. And so that is why the core key word today is ethics. What is accounting ethics? I know it is talk about the morals, the honor, the respect, the virtue, the standard, the worthiness. There are various ways ethics can be defined: truth, etiquette, performance, innocence, fairness, conduct, treatment, values, equality, social, theory, conventionalities, responsibility, integrity, motivation, faith, principle, sense. There are so many ways that ethics could be referred. But simply, ethics in accounting embodies the fundamental principles and values that direct the actions of professionals within the accounting domain. It resolves around making principled choices, upholding transparency, and showcasing a commitment to maintain integrity. So ethical behavior remains pivotal in the accounting landscape as it fosters credibility, cultivates enduring sustainability, and fosters a foundation of trust in financial practices and reporting. This is so because the accounting profession has been filled with a lot of unethical accounting practices, and so for us to go to understand why there is need for accounting ethics, we must know the unethical accounting practices. And unethical accounting practices include falsifying financial records, inflating revenue, hiding expenses, manipulating earnings, and misrepresenting tax liabilities. These actions mislead stakeholders, violate regulations, can lead to legal consequences, financial losses, and reputational damage for businesses and accountants alike. And because of this and many more, there is need for ethics in the accounting. And so we look at the importance of ethics in accounting. The importance of ethics in accounting. Ethics plays a vital role in accounting by preventing harmful financial practices that could affect businesses negatively. Following ethical principles not only helps in short-term successes but also supports long-term achievements, earning trust from consumers and meeting stakeholders' needs. And so ethics in accounting also benefit employers by fostering a better work environment, leading to increased employee satisfaction. Categorically, the importance of ethics in accounting can be summarized by this flow chart, which is represented by 5 headings: ensuring legal compliance, trustworthy financial reporting, preventing fraudulent activities, building corporate reputation, and fostering long-term sustainability. And so let's look at them briefly. How does ethics mitigate legal risks and ensure compliance? Ethical accounting practices serve as a shield against legal risk and non-compliance. Upholding ethical standards helps accountants adhere to regulatory frameworks and industrial guidelines. Maintaining precise financial records, following standard accounting procedure, and ensuring transparency minimizes the risk of legal repercussions, fostering a culture of lawful and responsible financial management. Now, the side of preserving financial integrity and building trust. So ethics in accounting forms the bedrock of financial integrity and trust. Accountants play a crucial role in presenting accurate and reliable financial statements. Adhering to ethical principles like honesty, objectivity, and transparency strengthens the credibility of financial information. Investors and stakeholders depend on all these reports for informed decisions. Upholding ethical standards build trust and confidence in financial data, strengthening relationship and market trust. Ethics also help in preventing fraud and unethical practices. Ethical accounting practices act as a deterrent to fraudulent activities and unethical practices. Accountants committed to ethical conduct are less likely to engage in fraudulent activities such as embezzlement or manipulation of financial data. A dedication to honesty and integrity discourages unethical behaviors, safeguarding the interests of the company, stakeholders, and stakeholders from financial malpractices. Still, enhance corporate reputation and image. Ethics in accounting significantly contributes to enhancing the corporate reputation and image of an organization. Commitment to ethical accounting practices fosters a positive perception among stakeholders, clients, investors, and the public. Companies consistently adhering to ethical standards are perceived as trustworthy and responsible, enhancing brand value and nurturing long-term relationship. And finally, how does ethics foster long-term sustainability? Ethical accounting practices are integral to sustaining long-term viability. Adhering to ethical standards ensures sound resource management, promotes financial stability, and reinforces business operations sustainability. By avoiding unethical financial maneuver, accountants contribute to a stable financial environment conducive to sustained growth and prosperity. Ethical accounting practices lay the groundwork for enduring successes and longevity within the organization. And so there are ethical principles in accounting which must be followed for all these significance, all these benefits to be actualized. Now that we understand the significance of ethics in accounting and the pivotal role accountants play in managing financial information and making impactful decisions affecting individuals, organizations, and society at large, it's crucial to comprehend how to act ethically. This is where accounting principles come into play. Established to ensure the integrity and trustworthiness of the profession, ethical principles in accounting serve as guiding beacons. They steer accountants in their daily practices upholding the highest standard of professionalism. This is because there are a lot of ethical dilemmas which professional accountants encounter, and these dilemmas have made it a necessity for all the ethical principles to be imbibed by accountants. The dilemmas include conflict of interest. Of course, you know that accountants may face situations where their personal interests conflict with their professional responsibilities, and this can lead to unethical practices. Also, confidentiality breaches. Situations might rise where they need to disclose information clashes with the obligation to maintain confidentiality. This is another dilemma faced by accountants, and also pressure to manipulate financial information. Accountants may face pressure from management or clients to misrepresent financial information. This is common within the public space. And that is why even in Nigeria today we have a lot of losses from financial mismanagement, and this is caused majorly by the carelessness or unethical practices observed by our accountants. Because you come to the public space from the federal through the state to the local government, across every ministry, parastatals and MDAs, they are professional accountants. So why are we having so many losses? It's because of some of these dilemmas, mostly the pressure to manipulate financial information by the so-called leaders. And so addressing ethical dilemmas requires accountants to apply their judgment, consider the relevant ethical principle, and seek guidance when necessary. Let's look at the core ethical principles in accounting. I have summarized it. The ethical principles can be summarized into 6: integrity, objectivity, professional competence, confidentiality, professional behavior, and professional skepticism. Integrity is the foundation of ethical behavior in accounting. So accountants must be honest, truthful, and transparent in all their professional dealings. They should adhere to the highest moral and ethical standard, even when faced with difficult situations. By maintaining integrity, accountants build trust with their clients, colleagues, and the public. Another core ethical principle is objectivity. Objectivity is essential for accountants to provide unbiased and impartial financial information. They must exercise professional judgment without being influenced by personal interest or external pressures. Accountants should base their decision on factual evidence and avoid any conflict of interest that could compromise their objectivity. Third, professional competence. Accountants are expected to possess the necessary knowledge, skill, and expertise to perform their duties competently. That is why not everybody is an accountant. That is why it is a profession that needs to, be trained. You need to be trained adequately to be a professional accountant. And so we thank and account for what they do, catching them young. Continuous professional development is crucial to stay updated with the latest accounting standards and regulation. By enhancing their professional competence, accountants can provide accurate and reliable financial information to stakeholders. And this is why it is important for you to keep updating yourself, because in this era of artificial intelligence, a lot of things come up, and so you must be abreast to the latest and recent happenings in the profession for you to be able to defend the accountancy profession. Confidentiality is the next guiding principle of ethical accounting. Confidentiality is a fundamental principle in accounting that ensures the privacy and security of sensitive financial information. Accountants must respect the confidentiality of client data and refrain from disclosing it without proper authorization. Upholding confidentiality builds trust between accountants and their clients, fostering a strong professional relationship. Another guiding principle is professional behavior. Accountants should conduct themselves in a manner that upholds the dignity and reputation of the profession. They should avoid engaging in any activities that could bring disrepute to the accounting profession. Professional behavior includes being respectful, cautious, and maintaining professional boundaries with clients and colleagues. And finally, professional skepticism, which is the mindset of questioning and critically evaluating financial information. Accountants should exercise professional skepticism to detect potential errors, fraud, or misstatements in financial record. By adopting a skeptical approach, accountants can ensure the accuracy and reliability of financial information, thereby protecting the interest of states. And so we look at the contributions of ethical accounting practices to nation building. What are the contributions? Remember what we are saying, promoting nation building through ethical accounting practices. So what are the contributions of ethical accounting? When you uphold the principles, the core principles, how does it influence nation building? Ethical accounting practices are crucial for nation building as they foster transparency, accountability, and trust, which are vital for economic stability and social well-being. By upholding integrity, objectivity, and professional competence, accountants contribute to accurate financial reporting, which in turn supports informed decision making by stakeholders, including investors, regulators, and the public. And so we look at the contributions in four broad aspects. One, promoting economic stability. First, accurate financial reporting. Ethical accounting ensures that financial information is presented truthfully and reliably, enabling investors to make informed decisions and promoting confidence in the market. And so when you give a wrong information, you are losing the confidence of investors. Effective resource allocation. When financial data is accurate, resource can be allocated efficiently, supporting sustainable economic growth and development, and reduce corruption. Ethical accounting practices help to minimize opportunities for corruption and fraud, leading to a more transparent and accountable financial system. Another major contribution is enhancing public trust. Very important. Enhancing public trust, and this can be looked upon in three ways: accountability and transparency, good governance, and social responsibility. And so when we talk about accountability and transparency, ethical accounting promotes accountability by ensuring that organizations are transparent about their financial activities, fostering trust among stakeholders. Good governance. Ethical accounting practices are essential for good governance as they provide a framework for responsible financial management and oversight. Social responsibility. Ethical accounting encourages organizations to consider the broader social and environmental impact of their activities, contributing to a more responsible and sustainable society. The third major benefit is supporting legal and regulatory compliance, which can be viewed in two ways: adherence to laws and regulations, and prevention of illegal activities. Under the first, which is adherence to laws and regulations, ethical accounting practices ensure that organizations comply with all applicable laws and regulations, promoting a fair and just legal system. And under this legal and regulatory compliance, prevention of illegal activities, ethical accounting helps to identify and prevent illegal activities such as money laundering and tax evasion, contributing to a more secure and stable society. And last but not the least, under this major categorization is fostering a culture of integrity, which could be viewed in two ways: ethical decision making and long-term sustainability. Ethical accounting practices encourage ethical decision making at all levels of an organization, promoting a culture of integrity and responsibility. And lastly, long-term sustainability. By prioritizing ethical practices, organizations can build a reputation for integrity, which is essential for long-term sustainability. And in this way, accountants contribute. Ethical accounting practices contribute effectively to nation building. In conclusion, although there exist ethical dilemmas in accounting, adhering to core ethical principles in accounting is not only essential for individual accountants, but also for the overall credibility and trustworthiness of the profession. By upholding these principles, accountants contribute to the integrity of financial reporting and decision making. In essence, ethical accounting practices are not just about financial reporting. They are about building a foundation of trust, transparency, and accountability that is essential for national building and sustainable development. Thank you all for your attention.